Greetings to everyone and namaste from Anshuman Tiwari. I think there is a little bit of an error. Hoping, yeah. So now we are live on LinkedIn, YouTube, and Twitter. And those who are in LinkedIn, YouTube, and Twitter and can see me, hear me, let me know where you have joined from. So it will, be of dual purpose. One, I will know that you are on the show, and two, I will also know that the show is now live. And so fantastic to have you here. Just some quick check. So, of course, my name is Anshuman Tiwari. If you are new to the channel, this is your channel, Manage Better, where I bring consultants, coaches, authors, and people who have done something unique in life and helped other people manage better. And then we learn from those people with the premise that none of us are born with the skills that can take us a life to live. So that we can all learn, keep learning, and through this, I bring people who can teach us something in life, work, and related areas. So today is one such show. You already, if you've seen the promos, you already know the guests. So, but I'll come to that topic in a minute. The first point, of course, and quickly, some people are mentioning that they are live. Sachidanand Yadav, thank you very much. And I'm sure others are now live. So that testing is done. But back to the point. Did you know that in only 20 odd years ago, in 2000, the life expectancy of an average Indian was 62 years. And today in 2023, and the survey was done last year, so that data was 71 years, which means in less than 25 years, the life expectancy of Indians has increased by 9 to 10 years. Right? And most of the people who are on LinkedIn or are living in cities with good medical facilities, access to nutrition, and general interest in healthcare, might actually live much more. And much of this life will be a healthy life. Now, take this knowledge back about 25, 30, 40 years when our parents, my generation parents, and all were working. They would expect to work till 60, and many, the life expectancy was not even 65, so many would not actually cross that limit or would not be working very, I would say, actively. Now, while this is good news that life expectancy in India is more 10 years higher now, and in another 10 years it might become another 5 years higher, so people will live actively till 75. It begs a question. The question is, who will fund your longer life? The government no longer funds your longer life. If you are living longer, good luck to you. Nobody is funding your life. The answer is you yourself will have to fund the longer life. So if you are above 35, 40 in that range and have started to think that I might have to work till 75, forget all this financial independence and all that. That will take time. But if I have to work till 75, or if I have to live actively healthy till 75, who is going to fund all that? One of the answers, of course, is ourselves, and which is the primary answer. And we will have to start investing wisely while we have the money, which is mid career, and so that it can help us in the twilight of our life. I don't want to sound grim or anything. All I'm trying to do is to give a realistic picture that while we are enjoying this life expectancy increase, one aspect of it is the funding part, right? Which basically means how do you live a good retired life? And retired does not mean 60. You could be retiring at 50, or you could be off active career at 50, but you will still have your needs for children's education, your own health, your lifestyle, and so on. And that's where all this topic comes in. So that's where I have my guest today. So I will bring her in a minute, but let me first give a quick introduction to her. So Sonam Shrivastava is our guest today. This is episode number 48 in this series. As you know, many of you may know, I do another series on quality. So that is at around 21 episodes. In this episode series, it is about 48. So Sonam Shrivastava is founder of India-based Robo Advisor. We will check with her what is a Robo Advisor, right? So Robo Advisor, Wright Research, and Wright with a W. With over 10 years of experience in investment research and portfolio management, Sonam is a highly accomplished financial expert with a passion for quant finance. Her journey in this field began in Mumbai with Forefront Capital and then later on with Edelweiss and HSBC. So some common thing, I worked for HSBC for some time, so there is something in common. Uh, but she's quite uncommon that way. So you will, when we meet, you will know. She's built her expertise in factor-driven portfolio solution, and in 2019, started Wright Research, which offers research-based model stock portfolios to investors. And those of you who invest on small case might also see her small case is doing really well. I've invested in one of them, and I will be behind her, to make some money for me. But we'll get to that. So, claim to fame during the COVID-19 pandemic, her research actually got very widespread recognition, and like many of us, in 2 years, a journey of 10 years was traveled. So let me put it that way. And she's now very well known in this field and is also known because her firm actually uses AI and advanced tech to create these recommendations, which we will ask her about. Sonam is also a visiting faculty at the AI in Finance Institute in New York and the BSc Institute Limited, further cementing her position as an expert. So let's welcome Sonam into the stream. Namaste, Sonam, and welcome to the show. If
Thank
I
you for having me, Anshuman.
my total pleasure, and as I was reading, I realized that in a field which is maybe glittered with veterans, you came in and disrupted with your technology based interventions, and we keep reading about you, Times of India, Economic Times, so many places you are mentioned. So I'm glad that you accepted our invite and you are here. So welcome once again. Any opening comments before we get into the questions?
No, I'm very excited to talk to you, Anshuman, and the topic that we are covering, that it's so important. So really excited, and thanks a lot for the introduction. Right, I think you made me sound so much accomplished. We are doing interesting stuff and hope to do much better in the future. Right?
No, but sometimes what happens, Sonam, is that you are busy creating a legacy. You don't realize what all you have created and where all you have ventured. And it's a pleasure knowing you. And those of you who don't know, Sonam and I were part of the LinkedIn Creator Accelerator program, and that is how we kind of know each other. And I then have been following her work, and that's how the association and admiration as well. So we Sonam, the format of the show is that we will, of course, have some questions for you, um, easy ones. So, and then we will take some questions from the audience as well. Right?
Yeah.
That's the general pattern, and already quite a few guests have joined in, so we will come to that later. But from a I built this session more as a personal finance and investment one. I know that your expertise more on investment, but from my point of view, my audience is mostly mid-career people, right? So people who are
Right.
neither freshers nor very senior, but mid-career. And I believe mid-career is the place where we have to start investing aggressively, because before we realize we become a senior person, and then it is too late to start investing. Talking from
Right.
personal experience, that I started realizing that although I've been investing in mutual funds since 2000 or so, so more than 20 years, but it wasn't very aggressive. So I was very small
Yeah.
amounts or very moderate amounts, I would say. Only in the last 5 7 years I realized that time is running out, and if I don't invest, I would be living on my children's mercy after retirement, which is not a very
Yeah.
nice thing to look forward to.
Right.
So the the reason, I mean, this whole show, of course, is we will bring in some personal finance as well, but keep
Hmm.
it to investing. Right?
Right.
So first important one, which you might anticipate, with so much turmoil in markets and people losing money actually these days, more than
Yeah.
gaining, right? Why
Right.
should I even consider investing my money in and risk losing it? today more people are losing money in investment in stock market in other, and we already know the crypto topic, though
Mm-hmm.
we will not possibly go there. But in general, people are losing money as of today in the market, especially
Right.
the retail investor. Why should I
Right.
even consider investing my money and risk losing it? Any views on that? As a,
Definitely. Definitely. So that's a very pertinent question for today's time, and I think that is something that a lot of us need to understand. That like you said, you are looking to save money to build your long term wealth, to save for retirement, and have a healthy retirement life. But if you are putting that money into like a FD or gold, the returns that you get out of it, right, in the long term, will not help you beat inflation, will not help you build that cozy nest egg for you in your
hmm,
later life. Whereas equity on the long term has immense opportunity, right? Equity investing in the long term outperforms your bond and gold, these type of investments in the long term. So right now, what I would say is, even though there are troubling times, we are this is very common, right? Like if you see your portfolio lose 2% in a month, that's not the end of the world, right? Uh, Investing, ups and downs will always be part of investing, and what we have to be very very aware of. I think the first thing that we have to be aware of when we start this journey is that there will be good times and there will be bad times, right? And this is a long term game, right? So you have to plan for the long term, and understand that markets will give you good times and bad times both. And the market bounces back, and then that's how it gives you good long term returns. And if you are doing an SIP, if you are regularly investing in volatile times also, right? If the markets are bad and you end up buying at this point in time, so when the markets rise, you would have made the most amount of gain, right? So it is very important that we keep on to the long term investing philosophy. We look at our long term aims, right? We are investing in the market because we expect equities to do better in the long term, and that should be what we should always keep in mind. And also you know a mid-career professional should have a healthy asset allocation, right? So they don't need to put their money in the most risky strategies or the most risky equities, right? They should always have a healthy asset allocation. They should have a fair mix of bonds, they should have a fair mix of gold in their portfolio, and that will give you a very sustainable sort of a performance over the long term. So I think good and the bad times are part of the process. Like you said, that we made progress during COVID or after COVID, right? And that was one of the best times for equities. And that is one part of the process. But volatile times will come, and it is part of the game. And we are patient, we are not discouraged, because we know that it is a long term game, and the good times will come sooner rather than later, right?
no, fair thing. I completely agree. I don't have too much knowledge in this, but one thing I can certainly relate after having shown some interest in this area in the last few years. And my interest was driven so much more because I realized I am slowly getting closer to retirement, and I have to take
Mm-hmm.
charge of my own finances. Otherwise, things may not be what I expect in 10 years from
Right,
now when I'm at that
right,
stage. So, like you said, this is a long term game, and people who are in mid career especially are, there are two important things for them, and you might agree, Sonam, that a they have some decent income now because the early phase is over. Now they have a
yeah,
settled career, so they might be having some decent income. And b, they are closer to retirement than they were earlier. So they have to keep an eye on both the things, their earning potential and their investment as well. But very fair answer. That core answer, of course, response from you is that if you are investing, this is anybody who's investing should think of longer term. This is not a short term thing.
right.
And that is probably where I can remind everybody that Sonam's work is not about trading, it is more about investing, right? So there is a clear difference. Trading mostly is I mean, it can be multiple things, but it mostly is for you play for swings, you play during the day, and you make some money during the day, even on very small movements. Uh,
Hmm.
Less than 1 rupee movements also you can make your money in trading. But when you invest, you are generally looking for slightly longer term. Would that be right, Sonam? My amateur knowledge of finance, is that
No, no,
okay?
definitely. So, yeah. So when you trade or when you participate intraday, those are a very different thing, and investing for your long-term wealth creation is a very different strategy, right? And I think again, Anshuman, like we have to understand that a lot of us in India, especially, look at investing as like a gamble that we have taken, or it is something that we're not very sure of, or it's not taken seriously. But even investing in a passive product, even investing in an index, right, has immense long-term benefits. And if you add specialized strategies on top of it, then your investing itself, you will end up seeing that you have created a very good long-term asset for yourself by being regular and systematic in the market.
Fair enough. Okay. Um, Moving on, my next question was a little bit more around mid career, part of which you started in your answer, but I think let's get a little deeper into that. Since most of my audience is actually mid career people, and this show gets recorded, so it is available for people later on as well.
Yeah.
Uh, so my question generally is that, we of course have some money in mid career, and but we also have clearer sight of our life goals, so children's education, marriage, our own retirement, maybe a foreign trip, or some large expense, or a big house or a car, or those kind of things. So we,
Yeah.
while we start earning money, we also have these life goals, or in some terms, some kind of milestones, financial expenses that are there.
Right.
Um how do you see investing helping in all of this? Where is this investing thing coming to help these life goals? And retirement is only one life goal, right? There are many before
Hmm.
retirement which have to be funded as well, right? Anything on that?
Definitely. So, investing can help you in all of your life goals, right? And I think, uh, as we're talking about financial planning, the key is planning your goals, right? And then you have a solution for everything, right? You can understand that you might want to plan for retirement, you might want to have a insurance in place, you might want to buy a house, buy a car, or you have your child's education, or any number of goals, and they will each happen at a certain point in your life, right? Like some goal, let's say, comes in the next 2 years, whereas your retirement is a little bit far off, right? So there are investment products for everything. Something that is very short term, you put that money in a safe bond fund, right? And you just let the money lie there, get a small return on it, and it's safely available for you in as soon as you need it. Whereas something that is a little bit far off, you can take some risk component there. So it's good that you have a balanced equity plus debt approach, and you end up capitalizing on that and creating a better return than what a simple FD would have given in that scenario. So investing sort of enables a lot of our goals. And when we talk about long term, and Shuman, in the long term, we can make assumptions on the returns, right? So I cannot tell you ki, okay, next month we are giving you 5% return. I can never say that. But we can sort of safely say that this type of product can in the long term give you 15%, or this type of product can give you 20%, and accordingly you can plan around your goals, park your money in these investment products, and be secure that my future in this particular goal has been planned, right? And I am sort of saving for it. So investing can enable a lot of our personal goals.
Fantastic. And I can speak from my own experience that, once I started getting a little bit more involved or interested in this, I have been investing from a goal point of view, and it's been quite nice. My elder son is now in university, and the expenses are always, many times more than what you have planned for. So I can tell you, anybody who's watching now or will watch this later, if you think your requirement of a certain goal is X, please plan for 2X. Particularly related to all this education and all, education has become extremely expensive.
Yeah.
And you don't have to go abroad for that expensive education. Expensive education has landed in India. So my elder son is, of course, studying in India itself, and some part of his fees is actually very similar to what I would have paid had he gone overseas. So that
Wow.
bridge will only get worse in the next few years, because international universities will be in India, and obviously they will be higher priced. And if you want your children to be educated, what you plan today is not going to be sufficient, right? So on that count, I must remind everybody that Sonam is quite active on LinkedIn and also is quite active on other social media as well. And I'll bring her website as well, so that if you are interested in more on this topic, please follow her on LinkedIn as well. And she keeps dropping. I wouldn't say tips. In the investment world, tips is a completely wrong connotation,
Yeah.
but at least some guides on how you can be a little better investor. And for more, you can go to the website wrightresearch.in. And of course, if you are a slightly advanced investor, then you might be already aware of Smallcase. She has some small cases there as well, and you can take benefit from there. Okay, moving on. And at this point, I can ask my audience also if you have questions for Sonam, not for me, not on this topic, right? So questions for Sonam, you let me know in comments, and I will curate these questions very soon, right? So, okay, do we have quite a few people? So I'm expecting some questions coming in, and of course, keep your questions around investment and research related to that. Okay. Since I moving on to the next question, Sonam, I did talk about some bit of personal finance, right? So obviously, by talking about life goals and all, we are connecting this to personal finance. I didn't mean personal finance as in what do you do on a daily basis for personal finance. So that's not the intent. The intent is more that what do you do of your own money in a way that you can invest properly. And there are multiple numbers floating around, Sonam. One number I like, and it could be completely wrong, it may not be scientific also. One number I like is that if you are investing 50% of your income, then you are doing well from a investment point of view. Of course, this may not be true for everyone. It may be true for me, it may be Sonam might be investing 70%, somebody else might be investing 90%, somebody might be able to invest only 10%. So it is variable. But if you can, 50% is a number which is thrown at people. So, which is where this connects to personal finance. So, things like investing before you spend, frugal living, saving 50%, and what is your view on that? Do you agree with these kind of numbers? Frugal living, invest before you spend, beat inflation, 50%, or your number is higher than 50%? Anything on this?
So I think, I mean, that percent definitely varies from person to person, right? Different people might be at, different stages in life and might have different goals in life, right? Let's say if I was a working professional who is planning to become an entrepreneur soon, then I would start saving more, building a larger nest egg so that, it sort of supports me in the next 6 months of my, entrepreneur journey, which will be a little turbulent, right? On the other hand, somebody could have other sort of goals where they might have to put in money in a housing loan, or any sort of goal that they have put for themselves. So it always varies, but there's a very interesting formula that I sort of I used to hear a lot when I used to work at Edelweiss, which was that people say that your saving is your salary minus your consumption, right? But what should actually happen is your consumption should be your salary minus your saving, right? So saving should be your bigger priority, because saving is something that that will make your future life more comfortable, right? So saving should be a higher priority, and obviously it depends on person to person how much they can save. If you can save 50%, then you're doing a good job, and obviously, you know, being frugal is will have a good long term benefit. But you obviously you should enjoy your life, but you shouldn't be trapped in a lifestyle inflation where you're spending too much, or you are overspending, or you are trapped in certain goals that end up sort of derailing your wealth creation journey. So I think people should stay away from them, and be within the means and plan for the future, right? Whatever goals you have, whatever you want to achieve, uh, have a plan in place before you go to that, and make saving a priority, right? That's what I would say.
Really well said. I think that trap word is more important, Sonam.
Yeah.
So, like Sonam said, those who are listening now and will listen to this session later, it's extremely important to understand that whatever money you are spending today is no longer available to you for investments. It's gone, right? So, the formula that Sonam mentioned is obviously for anybody who's a little interested in finance must have heard that whatever you are earning minus your savings stroke investment, depending on how you do, and that is then the money available for your discretionary spend, or whatever you want to spend, right? So extremely important. Most people who are able to build a corpus are those who are very consistent and deliberate with their savings and investments. So well said, Sonam. I will so 50% is not advisable, right? So just to come back to that number, like
No,
you
it
said,
totally
50% is.
depends, right?
Okay.
I think during the pandemic when I was at home, I am
Hmm.
sure I was probably saving 70-80%, right? So I think it totally depends on people's.
So
Yeah.
yeah, so I wanted that answer, so I got that answer, right? So I've been telling everybody, particularly slightly younger people, that pandemic was a fantastic time to increase your savings, and post that also, because now we know that we can actually save that much. So why
Yeah.
should we, right?
Right.
So okay, we our common friend Mrinal has something to say. I'm very scared. She might be schooling us a little bit, but need this discussion close to the next financial year. So thank you, Mrinal. Huge thank you. And also, I do have the same dilemma between frugal spending, saving, or yeah. So no longer the dilemma, Mrinal. You can be frugal, shamelessly frugal, no problem. Uh, some questions have started pouring in, Sonam. So let's take one or two more questions, and then I will revert to the questions that I had.
Yeah.
Jayant, somebody I have known from 1994, he has asked, what should be your, as in our, in general investment, first investment, FD, stocks, funds, retail, or real estate, or something else, and is reverse mortgage a good strategy? Very loaded. Second question is actually currently not applicable in so much in India, so we can even skip. But the
Hmm.
first question, anything, Sonam?
When somebody starts their journey, right, what I would say is be a little conservative, right? What that means is, like, I won't say put your money in an FD, that won't be my advice. And I won't say, put your money into real estate. What I would tell you is that start with a asset allocation suitable for your, where you are in life. So let's say you are a young individual, right? So put your money maybe 80% in a slightly passive equity strategy, along with some debt component, right? If you are in the mid career, then we've heard 60-40 quite a lot. So keep a 60% equity allocation, 40% bond allocation, right? And that's when you will see a consistent growth in your capital, and a safety net start building with your systematic investment into it. So I would say start with a healthy asset allocation, and build up on top of that. I think a lot of people like me, who started early, and who did not have we don't have a lot of financial education in our schooling, and I studied engineering, in fact, right? So I took a lot of risk when I sort of started experimenting with future and options. I started looking at some equities, trying to pick up smaller stocks, larger stocks, so it has been a journey. But I think, if you started with a relatively conservative strategies without taking too much risk before you begin, right? I think investing is a journey, and you can stay in it long term and keep on learning. So you don't want to take all the risk when you start. Start with a conservative portfolio for yourself, and then start building on top of it.
Sure. Um, there are a couple of questions around home loans. I don't know why home loans is the flavor of the. There are three now. So, but I'll pick one. How should we plan our investment? This is from Hemant. How should we plan our investment when we have big loans like home loans? So, first of all, why do you have a big home loan? We have to consider that. But should we plan to repay the loan first or do both? Sonam, anything you have to say on this? Should we plan to repay the loan first or do both? Do both as an
Correct.
investment and home loan?
Yeah. So if home loan becomes a huge component of your salary, then obviously you have little left to invest, which I have seen, with some of my family members who have invested in real estate because they didn't know anything apart from it. And real estate can be a illiquid asset, right? Where you cannot enter and exit very quickly. It is something that you have to stick to for the long term. But yeah, see, real estate is also at the end of the day an investment, right? And you can continue your real estate investment, and if you want to let go of the debt that you're carrying because of that, you can repay it. But if you are comfortable, it's not a huge part of your salary, then you can keep on that for the taxation benefit, which I think a lot of us do. But obviously, tax regimes are also shifting, right? Maybe in a few years that option goes away, right? So we have to be very aware of that aspect as well.
Already the second home is not as attractive as it used to be, Sonam. So some years ago,
Yeah,
if you are investing in a second home or third home, it was hugely beneficial from a tax point of view. Those things are
yeah,
already not the same. So Hemant, I think you probably got your answer. A little bit that I can add, and is that if you are investing in a home other than the one that you're living in, then you have to be a little wise about it. That do you have that return potential? Is it actually an investment or a more a debt that you are buying, and those kind of things. So that's a completely different topic, but not our expertise. But if it is for the house that you are staying in, general thumb rule in the industry is that, and this is because most of the interest that you are paying on the home loan is recovered in the first 5 to 7 years. So even if you take a 10, 20 year loan, your target should be to return it in the first 5 years itself, or the sooner it possible, because the interest component for the entire period is actually being recovered much earlier. So later on, it is okay to let the home loan drag because you are only repaying the capital. Actually, technically, future value of money point of view, you might be gaining because you are only repaying capital next year and can continue. So if you can return the loan very early, fantastic. If you can't, then it's okay to drag and because you have already paid the interest that you had to pay. So what's the loss now? But anyway, this is not a financial advice. It is more a practical advice from somebody who's seen both issues.
yeah.
Okay, quite a few questions coming in. The home loan questions we'll take later. I don't know why. Either I look like somebody like a home loan advisor, or Sonam, you look like one. But there are questions around home loan. So this is something I wanted to ask you about. That we've read this robo advisor or AI for investment research and advice, and because of all the Chat GPT and Mid Journey and Dali and Chat GPT 4 and
Yeah,
other things, AI is suddenly very common. But you and I know that AI has been around for 50, 60 years, and there are commercial use cases for the last 10 years. You have been
correct.
using AI in your investment research for the last 5, 6 years, from what I know. But
Yeah,
how do you use it? I mean, can you shed some light on how do you use it for investment research?
definitely. So first thing, I'll talk a little about robo advisory and why do we do what we do, right? Um, I mean, see, what we are sort of betting on is that the Indian market has an immense set of opportunities, right? But the solutions that a lot of people have in the equity market, let's say an index fund or a mid cap fund or a small cap fund, typically ends up being very passive, right? And we see that there are so many other opportunities that you can explore, backtest, and find, take advantage of. For example, take our momentum strategy itself, right? It's a very simple strategy that's betting on stocks that have picked up trend, and because of that nature, it ends up winning big during bull markets and being relatively stable in bear markets, so ending up being much better than the long term index. So so there are a lot of benefits of slightly active tactical investing, which is what we are sort of betting on. And talking about AI, right? AI, like you said, that we all know has been there, and I think AI only makes our lives better, right? Take for example Chat GPT. I never thought that I would have help in the content writing piece from a AI engine, but now it has come and it has made our lives so much better. Similarly, in the investing space, there are various very important solutions where AI has a very important role. So, take for example, like I said, there's so many opportunities in the market, but how do you spot them, right? So I can look at the fundamentals of the company, or I can look at the prices of the company, or I can look at what an analyst is saying. But we all know that sometimes the sentiment in the news that you can pick up, or any other insight from the news that you can pick up, ends up being very important, right? But how can you get it on a very regular basis and a consistent basis? So that is where AI comes in. AI solutions can pick out sentiment from social media and news and give it to a portfolio manager or a strategy that is running. They can take advantage of it. Similarly, when we are creating a portfolio, right, at the end of the day, what we're trying to do is get a better estimation of future returns, right? So an AI engine can come in there, help us make better forecast on the risk as well as returns, and help us create portfolios that are well diversified, that have that are well position sized, and then they give you that consistent return that you're looking for, while also reducing your risk, so that when you are investing, you don't have you're not cluttered with worry, okay, is my portfolio going down or up? It is relatively consistent and diverse, right? So AI helps me solve various parts of the puzzle of investing. And obviously, investing is a big, huge word, so many things going on. But AI solutions can come and simplify a lot of things in that investing journey. And I like to be data driven and technology driven in a lot of what we do, in how we create our portfolio. And that's where we take advantage of these techniques.
Fantastic insight into something that so AI can be a little bit mumbo jumbo for most people. Only the entertainment related use cases are there, but this is
Yeah.
how actually it can be used. And Sonam just in a summary. Of course, I'm sure there is more technology than she simplified it for us. But if you want to know more, I said this earlier, but please do visit Sonam's website, rightresearch.in, or check her out on LinkedIn and follow her, because some of the what she's sharing here, she's also sharing in her regular posts. So if you want that insight, you can get that insight. And if you then have some love left, you can follow me as well. I also share a little bit, particularly not so much about investing, but of course about mid-career and challenges that all of us face. And financial stuff is also one kind of challenge. So let me take one more question, and then we'll take another question from. This is a slightly difficult one for me. Sheshagiri, Shesh, what should be a decent ROI to be assumed for planning for annuities? Annuities, as in, I'm
Yeah.
more like returns. So what do you think? Decent ROI.
So I think ROI, what they mean is annuity. What they mean is, when they have a retirement solution, right?
Hmm.
What is the annuity that they will be getting from that solution after they retire, right?
Yeah,
So decent ROI, see, I would say that uh, so we have to be conservative when planning for retirement, right? We
correct,
can't
correct.
take too much risk until unless you are a 20-year-old, right? So I would assume that you take a well balanced portfolio even in your annuity, and I would say a 10 to 12% ROI is something that a lot of advisors put in their assumptions, right? So like when we give our exam for investment advisory, that's the assumption that we typically go with, right?
And just to not to add, but to maybe support.
Hmm.
And that one reason for it is also because inflation traditionally in India has been in the range of 5 to 8%. So assuming that you have to beat inflation
Hmm.
for your money to actually be a little bit more than what you are today, you have to beat inflation. So if inflation
Yeah,
is going to be in the range of 5 to 8%, your investment should grow at the range of 10% or more, so that you have
right.
that 1-2% cushion. So Shesh, I hope that you had your answer. And Vipul has some money, and so investment in gold is advisable or not. I don't know whether you want to answer this, Sonam, but your choice.
No, gold should be a part of, especially in times like these. I think gold is at the peak right now, right? Like everybody is, they don't trust the markets and they are reverting to gold because they think some sort of a risk event could happen, right? So gold is it should be part of your portfolio. And I don't say then go to a jeweler and buy gold. You can invest into gold in various other ways. You can invest into gold ETFs, gold mutual funds, or sovereign gold bonds, which will end up giving you a better return, as well as you will also they're fairly liquid instruments. You can buy it today, sell
Yeah,
it later, right? So I think that should be, and gold should be part of a well balanced portfolio. So that is for sure.
fair enough. Which is something that so in our LinkedIn group, Vinod Bhatt is also there, who's recently
Yeah.
written a book, and I was chatting up with him, and he also suggested that asset allocation actually means that you take advantage of multiple asset classes. Don't
Mm,
try and make money from one, because nobody knows the future. And the times that we are living in, future is changing literally every day. One day index is high, one day it is low, and this might continue for a longer period because uncertainty will remain. And if
yeah.
more Silicon Valley events happen, then you never know. It could be a slightly longer winter than in an investment term. So, like you said, gold. And just one small addition, Vipul. Sonam did mention sovereign gold bond. So they are, of course, more longer term investments. So your money is there for longer period. But the good part is that you get significantly higher return. It's not actually gold that somebody is keeping you for you. So it's a government bond in that sense, which you can purchase. But good advice that don't go to your local jeweler and then start looking at physical gold, or something. You don't have to do physical
Yes.
gold now because there are so many other instruments that Sonam mentioned. So please do check with your investment advisor before you make any investment based on the conversation. So, just a clarification for everybody, today's conversation is more educational in nature. It is neither investment advice or any backed by research as such. So, if you make any investment based on this today, you are doing it at your own risk. Our suggestion is please find your investment advisor before you make your investment based on this conversation, right? So, thanks. Uh, Charmika is, of course, loving our conversation. Thank you, Charmika. Shesh, I have read your repeat query, but I'll come to you after a few more questions. So, uh, we did touch upon a little bit on the asset classes, and in the last 10-15 minutes that we have, I wanted to take a little bit time, Sonam, from you on this asset allocation thing, right? So,
Mm,
a lot of people, including me earlier, right, I have only become a little aware of asset allocation recently. right?
Mm,
And I'm 50. So assumption is that if somebody who's generally aware, generally, has friends and colleagues in good circles, if I wasn't aware, I'm assuming that many people like me won't be aware, right? So what is this asset allocation or multiple asset classes? And some of it was mentioned in your previous answer that there are multiple asset
mm,
classes. A little bit on this, and we understood why it is important, because not every class will grow the same way. So you are basically spreading your risk a little bit, that we understood. But what are these multiple asset classes, very quickly, so that our audience can understand that stocks is not the only asset class that we
mm.
are talking about.
Definitely. And you also talked to Vinod Bhatt about this, right? Like in
Yeah.
your previous webinar. And Vinod was part of my cohort in the LinkedIn program. So, big fan of his. Yeah, so see, asset allocation, obviously, we are mixing up different assets to part of a portfolio. And I did a webinar recently last month on asset allocation. And the way to understand in a most layman language is, let's say you are building a cricket team, right? So you can't just have, like a Virender Sehwag who can hit big runs, right? You also need a Rahul Dravid, and you also need different types of players who can create a well balanced team. And that's when you end up winning consistently, right? Similarly, in your portfolio, whereas you can have equities that can, give you big return, or like a momentum strategy that can give you good returns, right? But you have to balance it out with slightly safer instruments so that in the long term you have a better benefit. So that's where you have your equities, which are again of various types, right? So like I said, they can be large cap, mid cap, small cap. Small cap can be a little bit risky. You can have different type of strategies like momentum, value, etc. There's a fair bit of diversification within equities also. And then you have bond. Within bonds, you have corporate bonds, government bonds, and a lot of interesting products. You have gold that we talked about. You have real estate, and real estate can be now bought into REITs, right? So if you just want to take advantage of the investment return of a real estate of the real estate, then you don't need to go and buy a house. You can also buy these products which give you that return that real estate is going to give, but you can buy and sell them much more frequently, right? So I think these are some of the assets where people diversify to. I don't talk about crypto, so I don't even have that idea, so I won't include that here. But yeah, so if you create a healthy allocation to each of these components, right, it is very beneficial in the long term. So like in the good market, I am seeing equity is giving me amazing returns, right? Like equity is something that has been extremely good. But if you look at a time like now, Anshuman, some of our strategies, like we have a balanced uh, strategy which has a higher bond and a higher gold component than a high equity strategy. So in times like these, you will see that it ends up being lower risk and better in terms of return, because the gold and the bond in that portfolio cushion whatever volatility is happening in the market. And in the long term, it ends up being like a 20-25% CAGR. It is giving me great returns. It is also not only giving me good returns in good times, but also in bad times it is saving the headache, right? Like I'm not seeing very very sharp drawdowns for me. So I think that's what the benefit asset allocation has. It in the long term, an asset allocation strategy will end up giving you better returns than a pure equity and obviously a pure bond strategy. And also it
So it
saves you
saves
a
you.
lot of headache.
And especially for mid-career professionals, I would think that because of the reasons we discussed earlier, we are closer to retirement, and we might need a little bit more assurance or security, if you may add there's nothing secure in the world, but a little more assurance. So in that sense, multiple assets are important. And just for everybody's benefit, Sonam mentioned REIT is REIT, real estate. These are trusts. There are only three in India where you can invest in currently as a mutual fund. So like she said, you can actually, they are more liquid than actually uh, actual investment in real estate. You can almost use it like a mutual fund. But again, please invest based on your the advice that you receive from your investment manager. But there are multiple of these classes. We already discussed gold and multiple types of gold. So gold, bond, real estate, and gold and real estate no longer has to be actual gold and real estate. That's the last few minutes, I think, one summary that if you can carry, you can actually have a slightly more liquid form, which will form a cushion against any. So we've already discussed, when globally, when equity markets go down, generally gold and bond holds. So if you see a small case, Sonam, you are very aware of small cases, and we'll talk about your small case a little bit in a minute. But there is one popular small case called all weather investing. So all weather essentially invests in multiple classes. So it always gives very, very minor return. But when everything is going down, it is not going down, which means that you are still floating, but it will not go magically up when everything else is going up as well. So if
No,
you are okay with
no,
that
it
kind of
actually, Anshuman, in the most risky times, it actually starts looking like magic, right? So I
correct.
remember in 2020 when the crash had happened, I had just launched my small cases around 6 months ago, right?
Hmm,
And fortunately, we had asset allocation component where we had a fair bit allocation to bonds and gold at that point in time. So I remember on those days when the market was crashing like 8-10%, some of our portfolios were actually positive and it looked like magic. And that is what the benefit of asset allocation is. That in the
interesting.
most risky times, and then you have built outperformance over an equity market, right? You on the worst times you did not fall, so obviously you built a margin for yourself, right?
There you go. So we already covered a little bit of small case,
Hmm.
but one thing important for mid-career people, and I wanted to take a few minutes before we start closing the show, is that I know personally, Sonam, that people have made the mistake of investment before insurance. And
Yeah.
insurance, as in life insurance, health insurance, and that kind. As an investment industry professional, what is your view on this? What comes first, and what's the right way to go about it?
No, I think if as a mid-career professional, most of us will have a family to support, right? And uh, in case something unexpected happens to us, we want to be sure that our family is secure, right? So that's where insurance comes in, right? You want to protect your loved ones in any sort of scenario, and if you park a small amount of money in an insurance product, that will end up giving you, that will end up giving you that assurity that your loved ones are safe. So obviously, insurance has to be a part of your financial planning. And but what I would recommend here, Anshuman, is that don't go with don't try to do insurance plus investment, right? Don't do
Correct.
that structured product. If you want to plan for a term insurance, go for a term insurance. You want to do a health insurance, do a health insurance. If you want to do any other sort of insurance, you go with that. But don't try to make insurance your investment, right? I think that's what I would sort of say, because that ends up being very complicated, does not give you that benefit that you are looking for. And I think recently with the new tax regime, I think that incentive is also going away, right?
Yeah.
Yeah.
The
So I think
you
that's what I would say.
What you are saying is the ULIP part. Of course, the ULIPs will no longer
Mm,
be as popular, but even the 10D investment,
mm,
cap coming in. And those who are not familiar, 10D is investment is of course longer term investment where you can keep your money for longer term. It gets locked a little bit, but
mm,
the returns are very handsome, and the returns are tax free. So you invest this year, but returns are tax free at the end of 8 years, and it can go up to age of 75 and all. So it's a very popular product for retirement planning. But now
yeah.
the cap is that anything more than 5%, the returns are not 5 lakhs. The returns won't
Mm,
be tax free. So that
yeah.
those who are rushing, that date is 31st March. So if you are planning to invest that, talk to your investment advisor, and they will guide you on
No,
10D.
but I think again, just like I was saying, Anshuman, like on the investment side, right? Like even still in India, most of us, like majority of the people, they don't trust investments or they look at it as an opportunity. Similarly,
Correct.
insurance is also very under penetrated, so a lot of us are not taking advantage of insurance. It doesn't have to be for tax saving. Insurance has its own inherent benefits also, so it should
Absolutely.
be part of your own
Particularly,
choice.
particularly term insurance and health insurance. In last 2 years, COVID, last 3 years, maybe COVID showed us
Yeah,
that. And I personally know, Sonam, and I'm sure you also know people who did not have term insurance, did not have health insurance,
yeah,
and now they are gone. But
right,
family is now suffering because they did not take that action. So
right.
whether you are in early career, mid career, late career, insurance before investment is very, very sound advice. Not me saying, but even somebody who's in the industry saying
Right.
this.
And people who had insurance at that point in time, their families are relatively secure. I've seen that, right?
Correct.
That somebody who had planned it well, they've left their family in the middle.
And one additional point, of course, with so much turmoil in corporate, and I work for a large IT services firm, I can share very openly that this turmoil will continue. So you may not be in a job actually when you have that health crisis. So please don't depend only on your company health policy, because when that health crisis happens, you may not be employed. So first of all, you are out of job for whatever reason, good or bad, and then you don't have that health cover when you most need it. So please think of it carefully before you start your investment journey. Cover your and your family's health with a proper insurance over and above the company health insurance, because with so much volatility in job market, you just may be out of a job when that crisis happens. And I know personally cases where this has happened. Thankfully, in both those cases, they had personal health insurance, so they were able to figure out. Okay, toward the end, last question. There are a couple of questions, Sonam, I am avoiding because they are about specific investment advice,
Okay.
which is not the purpose of the show. So I will skip those questions. But Shesh has a follow up question. He's 42 and plan to stop working by 55. I lead a middle class life. How much should I save or have at 55 years? Slightly specific question, Shays, but is there a formula, Sonam, that Shays can use, or something that
Uh,
she can apply?
yeah, yeah. So I think it's a very standard. Like it's a simple math, right? Like I mean, you'll have a life expectancy, right? And whatever you spend right now, you should assume how much of it will you spend after retirement. Will you spend the same amount, or will you spend 50%? What are the different savings that you already have, right? So you can calculate it. Like let's say I want to retire at 55, like he said. He has a like life expectancy of let's say 85, so he has 30 years of uh, he
Right.
wants to get a regular income every 30 years to fund his consumption, right? So let's say he spends 50,000 today, right? He has to adjust that to inflation first of all, right? So whatever amount comes after 30 years, after those 10 years, um, if you want to spend 50% of it or 60% of it or even 100% of it, he can calculate, right, what will be the value of that annuity that he needs, and he will have a number that he has to start saving towards, right? So let's say that number comes up to like a crore or 2 crore, and he already has some savings. He can subtract that, and whatever is left, he can start a systematic investment into that retirement product. So it's a simple maths. I think you'll find a number of tools out there which will help you find that number for yourself. Even on Wright Research, our website, we have such a tool that can help you. Yes.
Sure, and I'll display your website once again so
Yeah.
that Shays, you can check here as well. And if you want to speak to somebody, always find some financial advisor. You don't have to take that product. Just inquire
Mm.
about your. They will have all the tools. You don't have to buy anything. You can inquire,
Yeah.
and they will give you a number. Usually, they will give you a higher number because they might want to sell. But it is a safe thing, right? So a slightly higher number is
Yeah.
not a bad thing. And please also keep in mind that from 55 to 85, assuming 85 is the expectancy, you will systematically withdraw some money, maybe 4%, 5% every year. So
Right.
that money is growing, at the same time you are withdrawing, so that corpus actually keeps coming down a little bit. So keep that in mind
Yeah.
as you do all this stuff. So before we realize, Sonam, we are at the end of the show actually, and there are still quite a few questions left. But
Wow.
I did promise you that I will not let you hold you from or longer than this. So thank you, first of all. Thank you very much for this. I enjoyed this conversation because some bit of that I have learned in the last few years. I validated with your advice, with your expert advice, and I'm doing okay. Is what I gather. So thank you very much. And for our audience, once again, thank you for joining, and hopefully this was useful. And once again, I would repeat that for don't take any of the inputs as investment advice. Sonam runs a research advisory, so obviously it is important for us to remind everybody. If you want professional advice, please seek a professional advisor. You can go to her website as well, or go to other sources that we mentioned, including Smallcase and other features, but with proper professional advice. And I would again remind that if you want Sonam's advice, you can follow her on LinkedIn and on our website as well. Uh, uh, the Of course, the classic difference we understood today was that her firm will offer you some robo advisory, which is basically using AI and algorithms and more deeper research than just tips that we get from here and there. So don't depend on tips from your uncle and the person in the Mumbai metro train. Do some additional work. But the show was not just about investment and stocks. It was also about reminding all of us in mid career that we are closer to our retirement than we want to think. And if we don't act today, we won't have a very good retirement. So we already had some examples in the show today who are in 40s and want to retire into late mid 50s or 60s. And so that planning has to start today. So don't leave it to whether you take the advice we had or not, but please be a little bit more aware and awake about this aspect of your career. Careers and income streams don't last forever, so it is important to look at this. That was the message of this show. I will leave you all now, and next week's show I will be announcing in a couple of days, so please hold on. And once again, those who have not subscribed to the or followed me as well can follow me or subscribe to the YouTube channel where you can get all the archives of this show. With that, I'll let you go, Sonam. And once again, thank you very much, and my lovely audience. Thanks a lot.
Thank you for having me, Anshuman. I had a great time.